Futures trading is risky and can result in substantial financial loss. Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and we're getting there, traders. Fed meeting is Wednesday. Tomorrow is Tuesday, April 29th, 2008. I should say today's Tuesday. It's about midnight, right? So today's Tuesday. This video is for Tuesday, but remember the Fed meeting is Wednesday, and low volatility is expected between now and then because, not a lot of jockeying for position before the report. And traders, in my last video, I told you fundamentals always come out in the charts first. And if I'm reading the charts correctly, fundamentals say that the Fed's going to lower by a quarter basis point or none at all. No lowering at all would blast these markets off. I don't know that we're going to get that. I'd love to see it, but I don't know that that's coming. And traders, I showed you a few charts in the last video, and I got a few more charts to show you now. Not a lot of them like the last one, so don't get nervous, but I do got a couple of charts I'd like to show you, just to show you the progression of the markets since the last video. Now, if you recall in the last video, I started to erase "Don't Fall in Love with the Upside" off my board, and that was not an easy thing to do. Traders, let me make this clear. I am not in the bull camp, but I got 1 foot over the fence, and that's a whole lot more than I've had for the last 6 months. So you never know. Maybe this won't be a dead cat bounce. It will actually turn into more on the upside. I don't know that for sure. Only the analysis can tell us that. And I'm going to go to the charts in just a moment. But look, another green Omni for tomorrow. Yeah, baby, another one. Where are these green Omnis coming from? I've been used to this bear market for so long. I got to start dancing on the upside now. But you know me, I'll trade up market, down market, sideways market. I don't care what happens as long as it does something, gives us Omniacs a chance to trade. All right, traders, let me show you the charts now. The progression from the last video to where we are today and where it looks like we could be going. And then I'll tell you about the Omni trade for tomorrow. Stay tuned for the charts, traders. Okay, traders, the first chart on tonight's menu is the S&P June daily bar chart. The S&P daily bar, when I showed this to you last, we were just getting above this average right here, the proprietary average we like to use at the Omni Trading Academy. We did get above it, we stayed above it, and now look at this, traders. We have taken out the major resistance line up here. Just danced above it and settled above it, and of course settled above the inverted head and shoulders. Inside that inverted head and shoulders, we find another smaller head and shoulders, so there are bullish signals taking place in the S&P chart. What we're hoping for next is a test of the 200 bar moving average. If we can get above the 200 bar moving average, we have a market. I'm not quite betting that we'll get above that yet, though. That's the big testing area, the Aberdeen Proving Grounds for you rough Crampton fans. That's where we should likely get above, or at least get a run a test of. If we can get above that, well, maybe both legs will end up in the bull camp. For now, I'm halfway on the fence, halfway over the fence. I don't know which way it's going to go. I'll let the analysis dictate that. But we have gotten above 2 major hurdles so far, traders. Another one coming. Let's see what happens. Let's look at a couple more charts. Okay, traders, the next chart you're looking at is the S&P cash market daily bar. And as you can see, the head and shoulders that took us down, it's the upright head and shoulders, is now the opposite one that's taking us higher. Very interesting. We did get above the average clearly in the spot S&P, and we created another one of those inverted head and shoulders, but look at how close we are to taking out the major resistance line in the S&P cash. If we can get above that, absolutely a test of that 200 bar moving average will come our way. Let's see if we can't get above that line. That line's between 1410 and 1420 in the S&P cash. We take that out, traders. We are looking at some upside here. Remember, we are not in love with the upside. We're just starting to look at the upside as a possibility of where we could be going next. As far as I'm concerned, if we don't take out that 200 bar moving average and we don't take out the major resistance, this was nothing more than a dead cat rally or a dead cat bounce in a bear market. However, my eyes are wide open and I am hopeful that it will go the other way. Now, the next couple of charts may show you that it absolutely does want to go higher. Let's take a look at those. Okay, traders, the next chart you're looking at is the Dow Jones cash market, the Dow Jones 30 cash daily bar. And look at this. As you can see, again, like with the S&P, we had the head and shoulders upright knock us down. Now we've put in the inverted head and shoulders, taking us up. And look how close we are already to the 200 bar average. Look at how close. I mean, we're here at around 1287. We're looking for 1375. That is where you'll find that average. We get above that, well, hey, baby, this thing's going to start rocking and rolling. We got the Fed meeting. If the Fed decides to help us out and not give too much of a cut so they don't scare the marketplace and boost the dollar slightly, I think that'll be enough to send us up there. Once we're above that, it's a whole new ball game. Now, let's go look at the leader. Okay, traders, the next chart you're looking at is the Dow Jones Transportation Average, and that is the leader, as far as I'm concerned, of the major indice markets. And as you can see here, we had the head and shoulders that took us down, but it took some time to get there. But what's interesting about this chart is this right here, the 200 bar moving average. Watch this for a moment. We stayed below it. On a test, we broke back down. A test, we broke back down. Another test, we broke back down. Comes down, rallies up, tests it again, and fails. Paying great respect to the 200 bar average. Then we break down, put it in inverted head and shoulders, and look, one test, two tests, three tests, and away we go. We get far above it. We are above the 200 bar average now. We are above the Omni's proprietary moving average. And we are on a tear. That's the leader. Look, contract highs are right here at this line. Contract all-time life highs for Dow Jones Transports. It's not all that far away. You never know what can happen here, traders. The leader says it's on its way up and it doesn't want to hear anything about the downside. So I am keeping my eyes peeled on this, traders. If this is the leader, and I believe it is, and I think enough videos that we've done will show you that it certainly does lead the indices either up or down, then my friends, we are on our way up for whatever reason being. I could care less. I'm an analyst, not a fundamentalist, but you cannot deny that that is a very, very bullish looking chart right there. So you've seen the charts. You see that leader? If in fact, and I do believe that that is the leader, well, hey, baby, this thing is moving higher, right? I didn't expect to be in the bull camp till sometime the end of this year or beginning of next year. But if they force me to go, hey, I'll jump on that bull and I'll ride it off into the sunset. For now, we're skeptical buyers. But for tomorrow, again, for 4/29/08 Tuesday, we got a green Omni in the S&P. And Omni says to buy the S&P in the mid to low 1390s. Mid to low 1390s, trading 1397.5 currently, so get your orders in. Traders, place a stop in a sensible place. Always place your stops first. Always use a stop which is sensible that you can live with. But remember, you gotta place your stops. A stop is your best friend. If you don't know where to place the stops or exactly where you should be getting in or out, you need to come down to the Omni Trading Academy. It's easy to find. It's www.livewithoscar.com. Grab yourselves a membership and come join the army of Omniacs that try to get this right every day. And I must say, Omniacs, every day I'm more impressed with the way you Omniacs either sit on your hands and don't trade, or you trade during the sweet spots where you should be trading and you're not over trading. You're not churning your accounts. I am very, very proud of the learning that's going on here and the discipline that you are all showing. So all you Omniacs out there, give yourselves a round of applause because you deserve it. Very good Omniacs. Okay, so we are buying in the low 1390s. Our profit objective is not really far. Low volatility expected, but somewhere above 1405, in between 1405 and 1412, somewhere up in the 1400s. We're going to look to take profit up there or be out MOC, and make sure you're out MOC market on close. Be out before the close. Tomorrow is Fed Day. If for some insane reason they decide to strike before their scheduled meeting time, you do not want to be on the wrong side of the market. Make sure a stop is in just in case, and try to be out by the close to make sure that you do not have a position if you are not ready for some sort of Fed action. Okay, traders, I'm not going to do a lot for this video. I'm going to make it quick. Give me a call anytime, day or night, 702-629-4755. Make sure you come on down to the site. And if you want to continue your education and you're not at the site, at least go to our YouTube spot. It's www.youtube.com/futures analysts. There we have 307 videos with a lot of techniques for you to learn from. It will really help your education. When you get there, please subscribe to the videos and leave comments, which I will answer for you. We have the Mandalay Bay. I have to mention that before I go. The Mandalay Bay, we are doing the money show at the Mandalay Bay, baby. One more time. Traders, it's May 12th, 13th, 14th, and 15th. Make sure you get yourselves on a plane and come on out to Vegas and hang out with the Omniacs, and you'll get to meet the entire crew. I'm doing a seminar. It's going to be fantastic, traders. So make sure you come on down and meet us, meet the staff, meet the whole Omni organization live for yourselves. Get to know us a little better. It couldn't possibly hurt you. All right, traders. Guys, should I say anything else? Because I want out of here.
Yeah, maybe don't trade alone.
Well, we know now, right? Enough of you have heard not to trade alone. Never trade alone, especially when you can come on down to our site, get yourselves a free membership, and join all of us Omniacs who help each other every day get through these markets. So traders, as intimidating as it might be alone, it gets a whole lot easier with us around you, surrounding you to help you get this better, to help you learn the analysis better, and to trade without emotion. And speaking of which, if you want to trade without emotion, make sure you say this to yourselves every morning, every afternoon, every evening. Say it in your sleep, why don't you? Because it'll help you. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.